Happy Wednesday. Welcome back to the show. James Rule, XRP, the crypto teacher. It is raining in Texas. It's cold, so today is going to be a day of jumping in rabbit holes and bringing information to the masses on my YouTube channel. Today, we're going to cover the major banks, the Vanguards, the Charles Schwabs, the BlackRocks that are finally starting to delve into tokenization, into ETFs, into crypto and blockchain. And we're going to have a good time. I'm going to show you a couple of clips of where Larry Fink is switching the script and he talks about tokenization. But before we get started, I'm going to talk about one of my sponsors, which is Ledger. Yesterday, I received the Ledger Nano Gen 5, which is brand new. It is a way to keep your cryptocurrency safe. You create your own wallets. These devices are 100% safe. You keep your crypto off the exchanges. You are self-custodian. You are responsible for your actions. But I tell you what, Ledger right now has a deal going on where you can get up to 50% off on their devices. And you can get up to $90 in Bitcoin whenever you purchase one of these devices. You got the Ledger Stax, the Ledger Flex, the Ledger Nano S Plus, and also if you come up here to products, here is the Ledger Nano Gen 5. It is brand new. It works in unison with your phone. It's secure. It's safe. I set it up last night. I set up my XRP wallet. I sent some XRP to it, and it's 100% secure, baby. Also, whenever I was setting it up, it tells you right here, secret recovery phrase. And what this is, you're going to write down a series of words to back up your wallets. Your secret recovery phrase controls your assets and is irreplaceable. Anyone with your phrase can steal all your assets. If you lose it, Ledger cannot retrieve it for you. So never share your recovery phrases. Never take a picture of them. Keep them locked up in a waterproof safe and take care of them. These are the keys to your castle, people. Let's look at crypto numbers. Total market cap, 3.23 trillion. We're looking at Bitcoin at 92,644. We're looking at Ethereum at 3165. We're looking at XRP, dropped a little bit. We're down to $2.14. And there is volatility. If you're new to the world of crypto, volatility happens. And what is this? Volatility means extreme highs, extreme lows, extreme fluctuation in the prices because we're still early. And once you are in this space for a while and you can handle the ups and downs, you're going to be okay. Because this is not a short-term investment when you invest in these technologies. The world has to catch up. The banks have to catch up. I've been in this 8 years, and I've seen some extreme ups and downs. I've seen neutrality for years. I've seen stifling of this technology in the United States, and we're going to talk about stifling of this technology. Financial Services GOP Chairman Representative French Hill talks about debanking, talks about choke point 2.0. Have a listen to this clip. It's only 2 minutes and 30 seconds long.
Financial Services Committee issuing a 53-page final staff report on how the Biden administration debanked digital assets. It details how Biden-era regulators used vague rules, excessive discretion, informal guidance, and aggressive enforcement, all to pressure banks into distancing themselves from digital asset clients. This resulted in at least 30 entities or individuals losing access to financial services. Joining me now is Arkansas Congressman French Hill. He's the chairman of the House Financial Services Committee. Mr. Chairman, great to see you this morning. Thanks very much for being here. I want to kick it off with your report. What can you tell us?
Well, Maria, happy holidays. Great to be with you. Hope you had a great Thanksgiving. This report identifies all the ways led by Gary Gensler, who was chairman of the SEC, the bank supervisors led by Michael Barr, then vice chairman of the Fed, and others, to systematically debank legal businesses in the United States engaged in the digital asset innovative space. And this was terrible for American competitiveness, and it led me during the course of the Biden administration to offer my FIT 21 bill, which is now the Clarity Act, which gives the rules of the road, clear market structure road rules, so that people know how to innovate. They can count on the federal government for not debanking them and actually encouraging the use of innovation blockchain technology inside financial services.
But why would the administration, the Biden administration, want to de-emphasize this?
Well, I think they took the same approach that the Obama administration is, that when they, in their privileged point of view, believes that somehow that this innovation is a bad thing, they wanted to see it blocked from access to the financial system. We call it Choke Point 2.0. Choke Point 1.0, led by the FDIC, principally during the Obama administration, encouraged banks through leverage, intimidation, guidance, verbal communication, email listing, to ban them from banking businesses that the Obama administration didn't favor, like gun dealers, for example.
I see.
And this is wrong when the federal government uses its authority to tell a private entity they can or cannot do business with someone just because of their a belief system that, you know, doing business with a gun dealer is bad, doing business with an energy producer is bad because of the climate.
Well, that.
Yep. And we went through Choke Point 2.0 the past 4 or 5 years. And a lot of companies were driven out of the United States. They went to the UAE, they went to the UK, they went to Switzerland, they went to other countries that started adopting these technologies, and it put us behind. And we are finally starting to catch up. And I'm going to show you a couple things here. So when all the banks participate, check out this little clip right here. Yep, when all the banks participate, it starts with the little guys. It starts with us talking about crypto and blockchain and how it's going to change the world. And then all of a sudden, ETFs come about. And all of a sudden, banks start looking at it because their clients want to invest in these digital assets and these blockchain technologies. And then the banks are pushed and pushed and pushed and pushed. And then all of a sudden, they start to accept it. And Vanguard Group is allowing their clients, 50 million investors, to invest in these different ETFs, XRP, Bitcoin, Ethereum, Solana, and it's happening. And Vanguard Group is massive because they handle retirement accounts. They handle 401ks. They let their clients leverage between money market funds, stocks, and now they are going to incorporate ETFs and crypto. And we're looking at trillions of dollars. Vanguard has $11 trillion under management. Charles Schwab has $12 trillion under management. And this article here says why $12 trillion Charles Schwab crypto entry could threaten U.S. crypto exchanges. It's saying that Charles Schwab plans to launch crypto trading in 2026, bringing Bitcoin and Ethereum to its $12 trillion brokerage platform. Schwab's low-fee model and strong regulatory stand pose a major competitive threat to U.S. crypto exchanges like Coinbase. It says the move intensifies pricing pressure as investors can already trade Bitcoin ETFs for free, forcing exchanges to defend their fee-driven revenue model. So what's going to happen? You know, are the banks going to pay yield on stable coins like these exchanges do? They're going to have to. They're going to have to give in. And if we go a little bit further here, Brian Armstrong, the CEO at Coinbase, states that major U.S. banks are partnering with the exchange on pilots involving stablecoins, custody, and trading. The banks are coming around, people. The banks are coming around big time. And Larry Fink says thought process has evolved on crypto at the 2025 Deal Book Summit. This was yesterday. And have a listen to this clip.
Bitcoin is an asset of fear. And when you're less fearful, like we had a trade agreement with China, you saw a shift downward. There is conversations this week that there may be some type of settlement in Ukraine. Bitcoin fell a little bit. So you own Bitcoin because you're frightened of your physical security. You own it because you're frightened of your financial security. The long-term fundamental reason you own it because of debasement of financial assets because of deficits. And so to me, even the movement in the last week, and we've had a 20-25% drawdown, and this is the third time since IBIT was created, our ETF. And so this is, you see these shifts, and they're actually pretty non-correlated shifts, and so the role.
But then some people say, is that really insurance, right? If you had bought it at $125,000 and it's now sitting at $90,000, you're saying to
if you
yourself,
bought it for a trade, it's a very volatile asset. You're going to have to be really good at market timing, which most people aren't. If you're buying it as a hedge against all your hope, then it has a meaningful impact on a portfolio. The other big problem of Bitcoin is it's still heavily influenced by leveraged players.
So you got the Michael Saylors, you got all these big players that are scooping up so many Bitcoin, which can have a huge effect on the market if they decide to rug pull and cash out. So Larry Fink is starting to become educated in the world of blockchain, in the world of crypto. And like he stated, the volatility. I'm not a day trader. I'm not a crypto trader. If I were to sell, the price would go up. If I were to buy, the price would go down. So that's what you're always going to hear hodl. Hold on for dear life, because you hold on until the rest of the world catches up. So don't put all of your paychecks into crypto like I did. Don't put all of your money into crypto like I did, because 5 years ago, I went all in, and it has, thank God, paid off. I'm up like 766% to date in my portfolio since I went all in. Let's go to another clip that I found this morning. I pulled up this Deal Book conference, and right here, I stated that BlackRock is coming to a wallet near you. Look what all Larry Fink talks about in this 2-minute clip.
okay, let me ask you a different question, Larry, because you just wrote a piece in The Economist about tokenization. And I think that tokenization, some people here will know it well, some people will not, so maybe you can help level set. But I think you have a view that tokenization is effectively going to change finance forever.
Yeah. Want to explain?
Explain.
Okay. So there's so much conversation going on about AI and how AI is going to be reshaping the world. There's not enough conversation about how technology is going to be reshaping the financial services area too, and the need for democratization. As Secretary Besson talked about, the democratization of investing in America. There are slews of middlemen in the whole financial services area. We have elongated settlements, elongated processes. If we could digitize every asset, so if we could digitize all stocks and bonds and have it more seamless, going from a digital wallet of cash or stable coin into equities or bonds through, in most categories, through an ETF, it will reduce the friction costs, the transaction costs, and it allows a much more free flow. So there's $4.1 trillion of money in digital wallets globally, sitting in stable coins mostly. And can you now, and right now, if they wanted to go into a bond or stock or have a real estate transaction, they have to take the money out of the digital wallet into a traditional wallet and have all those commissions and fees and all that stuff. So the whole idea of tokenization of all assets, including real estate ultimately, is to just reduce huge friction costs, making investing easier, simpler. You could, as the Secretary was talking about this one account, you could do this all through your app, and it's going to allow a more, I would say, a free-flowing process of investing.
Okay,
Yeah. So digitize every asset, reduce friction cost, real estate tokenized, making investing easier through your app and more efficient. We always talk about the XRP ledger. We always talk about how efficient the XRP ledger is because it was built to be a better Bitcoin. You could send value around the world in seconds for fractions of a penny. And if you don't think the banks are going to jump on this, you are thinking wrong, because the banks make their money off of interest rates. The banks make their money off of fees. And if they are using a blockchain like the XRP ledger, where it only costs them a fraction of a penny to send your money cross-border, send your money somewhere else, send your money here, send your money there, they're going to jump on it, baby. They are going to jump on it. So you need to wake up and smell the roses, Robert at XAMAN Wallet. I met him in New York. Wonderful individual. He is the COO of XRPL Labs and then XAMAN Wallet. And we talked for about an hour. He and I and Lady K spoke to him. We spoke together for about an hour. Check this out. This year has been one for the record books. Double-digit growth across the board. Active users closing in on 700,000. XAMAN Wallet opened almost 20 million times. Nearly 400,000 new users onboarded and over 423 million actions in the app. $500 million before 2026. XAMAN, I'm not affiliated with them, but I tell you what, I use this app. It is a hot wallet on your phone. Yes, you set up a series of recovery phrases, and then you can move XRP to an exchange. You can move XRP from an exchange to the XAMAN wallet easily. And also it has a built-in DEX where you can trade it for stable coins. You can trade it for other XRPL meme tokens if you want to, but there are so many advantages of being a self-custodian. And this is a good first step. If you can't afford a cold hardware wallet right now, if you're wanting to get your XRP off the centralized exchanges, download the XAMAN wallet app. It's at XAMAN.app. I'll leave a copy of it below. I use it religiously. I move XRP around. I get ready for a major moon event. And with XAMAN, I can send it straight from my wallet, straight to a centralized exchange and take some profits, baby. I hope everyone has a great Wednesday. If some more news breaks today, since it's raining, I'm going to be researching all day. So be sure to subscribe to the James Rural Crypto Show. Share my channel with your friends. Have a great day. Be patient, hodl, enjoy the ride, and don't forget, I told you so.